Good morning everyone, this is Sage live from the 𝐊𝐴𝐴 studios and you are watching the opening bell. Let us cast an eye over how the Australian market charter is panning out today. Well, the Australian share market opened higher amid the tug of war between virus concerns as the country battles an outbreak of the highly contagious Delta variant of the coronavirus, and strong oil and copper prices on the other hand helping miners and energy stocks gain in the early trades. And looking at the market open trades, industrial sector is pulling the strings of the ASX 200. Sydney Airport skyrocketed on receiving takeover offers from IFM. Then the Auckland Airport and Transurban also rose. Other top performing stocks in the ASX 200 included Chalice Mining and A2 Milk. The infant formula maker, the A2 Milk, jumped on scoring regulatory approvals and meanwhile were leading the laggards during the early trades. Next, before we jump to the ASX charter for today in detail, let us look at Friday's US markets performance first. On Friday, Wall Street and the Dow Jones rose 0.44%, while the S&P 500 gained 0.75%. The Nasdaq Composite was up 0.81%. And the US equity markets traded higher, hitting a record high amid a better than expected US monthly jobs data for June 2021, signalling a strong end to the second quarter of the US economy. However, there were a few weak spots in the jobs report, including a slight increase in the US unemployment rate. And while the US jobs data revealed that the US jobs growth picked up pace in June 2021 as non-farm payrolls increased by 850,000 jobs after rising by 583,000 in May of 2021, surpassing the estimated increase of 700,000 jobs by the economists polled by Reuters. However, the US employment is still lower than its pre-pandemic level. It is approximately 6.8 million jobs below its peak in February 2020, prior to the coronavirus causing havoc in the US and around the world. However, the unemployment rate saw a slight uptick of 0.1% to 5.9% from 5.8% in May of 2021. And while prospects of a sharp economic recovery supported equity markets, market participants remained nervous that this economic rebound could boost inflation to an uncomfortable level for the US Fed. And former US Treasury Secretary Lawrence Summers has said massively scaled up US fiscal spending will likely set off inflationary pressures not seen in a generation. However, some argue that until wage pressures return in force, a return to 1970s style inflation is highly unlikely. And on that note, the US Treasury yields traded lower on Friday as a strong payroll report left uncertainty about how the US Federal Reserve might act. And moving on now to the currency space, the US dollar retreated from its three-month highs on Friday, weighed down by the US non-farm payrolls report for June of 2021, which depicted a strong key number, but some weak components. And the dollar index was down 0.3% at 92.246 after earlier hitting a three-month high of 92.759. And meanwhile, the Australian and New Zealand dollars traded sharply higher on Friday, and the Aussie dollar was up 0.78% to reach 0.7525 US dollars, despite the re-emergence of coronavirus lockdowns in Australia, hurting sentiments as a trio of local data underlined the upbeat economic outlook at home. And now it's time for a short break, but please stay tuned as I'll be back with the trending updates for the Australian share market after this.
This is Andy Liu broadcasting from 𝐊𝐴𝐴 Media Studio in Australia, and I'll be hosting the new 𝐊𝐴𝐴 Wellness Show. The half-hour show will cover topics from how wellness as a concept has become even more significant during COVID, to how becoming vegan may improve your health, and much more. We are excited to showcase our live streaming show to our audience of millions overseas and in Australia. Tune in to 𝐊𝐴𝐴 TV and join me.
Welcome back. This is Sage. Viewers, your host live from the 𝐊𝐴𝐴 studios, and you're watching the Opening Bell show. And well, now that we have taken a glimpse at the US market performance before the break, let us look at the major newsmakers in the Australian share market. And to begin with, the airport operator Sydney Airport skyrocketed 37% on receiving takeover offers from IFM. A consortium of institutional investors led by IFM Investors has launched a takeover bid for Sydney Airport, pricing its shares at $8.25 Australian, a 42% premium on the Friday closing price. The institutions behind the deal include IFM Investors, the giant fund manager, part owned by super funds, 𝐶 and Global Infrastructure Management. And according to the airport group, the indicative proposal has been made during a global pandemic which has deeply affected the aviation industry and the Sydney Airport security price. And the indicative price is below where Sydney Airport security price traded before the pandemic. And meanwhile, donor management system for charities Pushpay Holdings dipped during the early trading hours amid news of a CFO hunt. And Pushpay said it was looking for a new US-based chief financial officer after the current CFO, Shane Sampson, announced his resignation. And Shane Sampson is set to join the corporate travel and expense solutions provider 𝐊𝐶̈. The next newsmaker worth looking at is the gaming and entertainment group Crown Resorts, slid on updating earnings to reflect the COVID hit. Crown expects to report theoretical earnings before interest, taxes, depreciation and amortisation, or EBITDA, before closure costs and significant items of between 240 and 250 million Australian dollars. And besides, the group expects to record a statutory loss after tax for the full year ended 30th June 2021, with the result subject to review. And infant formula maker, the A2 Milk, jumped on scoring regulatory approval. A2M said that the New Zealand government has issued approval to its acquisition of a 75% stake in Mataura Valley Milk. And next grabbing the news is the gambling player Tabcorp, that edged lower on news of demerging lotteries and Keno. The company issued a confirmation that it plans to demerge its lotteries and Keno businesses to create two standalone ASX-listed companies operating lotteries and sports betting separately, and the demerger is expected to complete by the end of June 2022. Let's move on now to property group Stockland, whose shares rose on its acquisition plans. The group has admitted it's in talks to buy Hallison Group's land lease communities business for an unspecified value. It said there's no certainty around any agreement, and the potential transactions is in line with its stated strategy to grow its land lease communities business, which has an approximate 3,000 lot pipeline. Human services player AVA Group rose on hiking guidance. The group has hiked its profit guidance for financial year 2021, and the EBITDA is expected between $14.8 and $15.8 million on the revenue of $64.8 million. And now we'll just take another short break, but please stay tuned as I'll be back with the trending updates for the Australian share market.
Tune in to get the latest information.
Whether it's about market movements or the currency graph,
Sectoral coverage or industry news.
we cover it all on our news segments.
Be on top of the latest news
With 𝐊𝐴𝐚 TV.
Welcome back. This is Sage, your host, live from the 𝐊𝐴𝐚 studios, and you're watching the Opening Bell Show. And let us glance through the ASX sectoral charter. Well, the Australian technology shares traded mixed during the early trades, while the technology sector in the US supported the markets towards their all-time high levels on Friday. And Nuix, Afterpay, 𝐊𝐴𝐚 and Nearmap traded lower, while Xero Limited and WiseTech soared. And meanwhile, the Australian energy majors such as Beach Energy, AGL Energy and Oil Search traded in the red zone, while oil prices ended the last week mixed. And the Brent crude was up 0.44%, while WTI crude oil futures closed 0.09% down on Friday. And last week, OPEC Plus resumed talks on increasing oil supply a day after the United Arab Emirates blocked a deal. The standoff could delay plans of higher oil supply through the end of the year to cool surging prices that have already soared to 2.5-year highs. And let us move on now to the miners space. Heavyweight miners BHP Group, Rio Tinto and Fortescue Metals traded in the red amid the Chinese crackdown on the metal trading. And the benchmark Dalian iron ore marked its second consecutive weekly fall last week, though it inched up in a volatile session on Friday as China steps up efforts to curb supply to meet its carbon emissions goals. And the most actively traded September month delivery of iron ore futures on China's Dalian Commodity Exchange was 0.8% higher at 1,182.50 yuan, or in US terms $182.41 per tonne, after falling as much as 2.6% a day before. And meanwhile, copper prices traded higher as the market participants regarded the recent downturns in the industrial metal as a buying opportunity, supported by the upbeat US jobs data. And on that note, the ASX-listed copper players, Oz Minerals and Sandfire Resources, traded in the green during the early trading hours today. And then in the yellow metal space, Newcrest Mining and Evolution Mining, Ramelius and Gold Road soared amid the gold price uptick. On Friday, the gold traded higher, climbing further from a 2-month low hit earlier in the week. Investors weighed prospects for the US Fed tightening its monetary policy after a strong US jobs report, despite it showing a slight uptick in the unemployment rate. Weakness in the US dollar also triggered demand for the yellow metal. And that's all for now. Thanks for joining us on that report. We will be bringing more stock updates in our upcoming shows during the day. Stay tuned for more live updates on 𝐊𝐴𝐴𝐼𝐴 TV across the economy, markets and sectors. Sage signing off for now.